In today's video, I show you how to master divergence trading. I show you the positives, I show you the negatives, and then I show you how to profit from it. And trust me, it's worth it. So enjoy today's video. Today's video is sponsored by Go Markets. Go Markets is a multi-award-winning broker who is regulated by the Financial Service Commission. Myself and the BD members have been using Go Markets for over 7 years now. They go above and beyond to support the BD community and their traders. They offer award-winning customer support, thousands of tradable products, and some of the lowest spreads in the industry. This is perfect if your style of trading is scalping like mine. If you're interested in signing up to Go Markets, please use the link in the description below. Thank you and enjoy today's video. Divergence trading. What does it mean and how can we profit from it? Now, there are 3 types of divergence trading: regular, extended, and hidden. But in today's video, we're going to learn and master the regular divergence because it's the most popular one and it's the most easiest one to spot on the charts. Now, divergence basically means when an oscillator is doing the opposite of price. So to give you an example here on my charts, we have some oscillator indicators. So as you can see here, oscillator indicators, and there's a number of different ones. Some of the most popular ones are the RSI, the relative strength index, the stochastic oscillator, the MACD, the force index. There's many of different oscillators. And what these oscillators do is they measure the momentum in price. So for example, if price is trending up, it means that the momentum is very strong. There's a lot of buyers in the market. And normally you would look at, let me give you an example like here, okay? Normally, if we just look at the candlesticks themselves and we look at the overall price, hold on. If we look at the overall price action on the charts, you can see that price is creating lower lows. What this means is that price is going down, that price is in a downtrend, it's creating lower lows. And by looking at the candlesticks themselves, if we just look at the, especially this candlestick here, because you'll understand in a minute why this is a kind of manipulation trick, you can see these candlesticks here that they are big red engulfing candles, which tells me what? That the momentum is strong, it's going down. However, oscillators are actually measuring the true momentum of price. And what oscillators do is they will measure trends. They will see price, well, they won't see it, but price is in an uptrend and the oscillator is measuring the momentum or the strength of that uptrend. So to give you an example here, okay, 9 times out of 10, oscillators are going to follow price. So price comes down here, the oscillator goes down. The oscillator goes up, price goes up. Price goes down, oscillator goes down. So as you can see here, it is constantly following price, and that's normal. That's what we expect it to do because, again, it's measuring price. If price is in a downtrend, it means that the momentum is going down, hence why the oscillator is following it. However, you'll get some points where it's doing the opposite, and this opposite is what we call divergence. So to give you an example here, price is creating lower lows and so is the oscillator. It is creating lower lows at this point. However, here it is not. It is creating a higher low. You see how price is still creating lower lows here, right? But look at the oscillator. If I just bring up a line here, see how price action is telling me lower low, but the momentum is telling me the opposite, higher low. So this is kind of a window into the future. It's telling me now that, hang on here, looking at the oscillator, it's telling me that the momentum is switching. It is going from a downtrend, to a possible uptrend. So the momentum is changing from sells to buys. And I see this as, I used to trade this all the time, and I used to call it a window in the future, a few candlesticks, a few minutes into the future, because you could take a buy from here and price will go up. And look what happens at the overall price action. It creates a higher low just there and it goes into an uptrend. So this is perfect for identifying trend changes, and this is what divergence is used for, identifying when a trend change is happening from a downtrend to an uptrend or an uptrend to a downtrend. Now, divergence trading, apart from seeing a window into the future and, you know, showing us when a possible trend change is happening, it also has its negatives. Its negatives are these two here. First one is, if you are to take a trade at divergence, it is technically against the trend, okay? Because looking at the price action here, if you were to take a buy at this divergence here, right, that there is technically against the trend, right? Because it's still creating lower lows. So you kind of have to understand that, okay? If you're taking a trade based off divergence, it is a counter trend strategy, because at the time you take a trade, even though the momentum is switching, we have divergence, it's technically still against the trend. And this is where a lot of traders will get trapped, they'll get stopped out or they'll get trapped in trades because it's still a downtrend, okay? So as if price continues lower, it will create new diversions, right? And that's sometimes what confuses traders, because they go, hang on here, I've got diversions, but it's not doing what it's supposed to do. It's supposed to tell me that price is reversing, but it's not. It's still going lower. It's because this is a counter trend strategy, right? You're not trading with the trend. The also thing that you have to remember, or a little trick that I'm about to show you, and what I'm about to show you now to be profitable with it, is the only way realistically to be profitable with it is you have to wait for a change of character. So not only waiting for diversions, you wait for a change of character, meaning change of character, if you don't know, price is in a downtrend because it's creating lower lows and lower highs, right? A change of character is when the opposite of this happened. It starts creating higher highs and higher lows, right? It's a change of character. It was a downtrend, it's now an uptrend. So if you want to trade it successfully, you have to wait for this kind of change of character. But the downside to that is you're entering a little bit late, okay? Because obviously a change of character on this particular example would be something like this here. You'd mark up the previous high here and you would wait for this area to be broken. So you'd wait for this area to be broken because technically that's a change of character. That's the previous high, that's the previous high here. As we break it here, perhaps retouch it or whatever, somewhere around this area, you'd be entering a buy. But the problem was the diversions actually happened all the way down here. So you can see how we're actually entering a little bit late. So that's the kind of negative to diversions, right? You either enter here and, you know, you're entering against the trend and hoping it will reverse, or you wait for it to reverse and enter here, but you miss out on all these pips at the bottom. However, again, you know, every strategy, every price action method out there will have its positives and negatives. What I'm going to show you now is how to master this, how we can use diversions to master successfully. So what I've got on my charts in front of me is, on my left screen, I have Euro USD on the 5-minute time frame, and I have this on pure price action. However, what I do have is my MACD indicator. I have a custom MACD indicator that comes with the binary destroyer. This is what we use to trade the Mogwai strategy. I've got rid of the binary destroyer, but I've kept the MACD. The reason being is because, as well as being a MACD, it's also a oscillator. Okay, you'll find it if you go to indicators, you go to oscillators, you will find the MACD, because same again, it is measuring price. Normally you'll have histograms on the MACD. I've turned mine off and I just have the MACD lines. But the good advantage to me is I have these arrows here. These arrows tell me when divergence is happening. So to give you an example here, you know, I've got an arrow just here. See the divergence? Price is creating lower highs. But if we actually look at price action, it is creating higher highs. So there you go there, okay? I'm using my custom MACD indicator. You don't have to use it. I'm using it because it's a good example. You can visually see it on the charts. So what I want to do is basically, I'm going to put these side by side like this here, and we're going to wait for diversions to appear. So I'm just going to press play on this simulator. Okay, and what I'm going to basically do is I'm going to wait until we get diversions. I'm going to try and see if I can physically spot it as well. And we will take a trade. So let me try and find you diversions. Okay, here we go here. Great, here's a good example here. We have diversions just here. Okay, so here we go here. 5-minute time frame. I'm going to try and rush this so we can get as many setups as we can in the 20-minute window I've got. Okay, so basically price is creating higher highs. MACD is creating lower highs. We've got a diversion signal. We've got diversions. So what I really want to do is wait for a change of character. Okay, I'm sorry about that. I don't know what happened. My computer just randomly froze. So basically we have diversions here. Okay, now what I then want to do is just quickly look at the 1 hour chart to see where see if there's any support and resistance. The reason being is because, again, if we're getting diversions, it means that there's potentially more sellers coming into the market, more orders than more buyers. Hence why you've got diversions, because it's measuring the momentum. So that must mean that there must be some kind of structural level, support and resistance, supply and demand level. And there is, as you can see here. So what I want to basically do is I've got diversions, I've got a resistance area now. What I want to do is I want to wait for a change of character. So what I'm going to do is I'm marking up the previous low like that there. And basically I'm just going to wait for that level to be broken. If it doesn't get broken and it creates a higher high, we don't take the trade. Okay, if it gets broken, then we have a change of character. Okay, which confirms a trade of a trend. Because as you can see here, prices come, by the way, I don't know if it's going to win, but price comes down to the level and bounces off it. So until we break it, we don't know that we've got a change of character. Okay, it's just broken up here and it's retouched this level just there. Let me just wait for that candlestick. Yeah, there we go there. So we retouch it. So now we've got divergence. It's been confirmed, as you can see here. We've got an area of resistance and we're now, guess what? Trading with the trend. So what we want to do is we want to put our stop loss out of the way. Now, because technically we're trading with the trend, we can go for a nice tight stop loss on this one. So let's go with, in fact, let's go for a really tight stop loss. Let's go for something like a 5 pip stop loss. 50 pip take profit. I mean, no, 50 pips is a bit extreme. 50 pips is definitely a bit extreme. Let's go for 20 pips. There we go there. So there you go. A nice little 1 to 4. Let's see if we win the trade. Okay, nice, nice. Don't get stopped out. There we go there. Beautiful. Interesting. We came back up and retouched that level a few times. I was hoping for perhaps a liquidity sweep, because obviously if you retouch a certain level multiple times, it's building up liquidity. You know, if everybody's selling at this zone just there, everybody knows that. Everybody's selling here. They know the banks know the liquidity is above it. But it didn't happen. We got a 4% gain out of it. Great. And that's it. That's basically divergence trading. So let's carry that on again. So what we'll do is we'll start off again is by looking for divergence on the no, that's not divergence. Nope. Oh, here we go here. Nope, nope, nope. I've got to try and do this quick because obviously I want to get as many setups as I can. Is this divergence? No, there's no support line here, so I'm going to ignore that one. Like I said, with divergence trading, you're not going to get many setups. And the reason being is because divergence only really happens. Oh, there's one just there, actually. There's literally one just there. Sorry about that. Hold on here. Give me a sec here. Just there, which is interesting. If I just zoom in here. So here we go. Here's divergence again. Okay, obviously I was about to say Mogwai signal. We've got divergence just there. Okay, so same again. Where's my chart so I can draw on it? Sorry, give me a sec. So same again. We've got divergence, as you can see here. Price is creating higher highs. The MACD is creating lower highs. We've got some Mogwai. We've got some MACD divergence signals here. So great. We've got Divergence, perfect, right? But it doesn't mean that price is going to go down. It could create a higher high. So what I want to basically do is see, okay, is there an area of resistance on the top which would justify why price would go down? Yes, there is. There is clearly an area of resistance. Perfect. Back to the 1 minute time frame. We're going to mark our previous low, which is actually just there. So there is our previous low just in the market. So what we want to do is wait for this to be broken, perhaps a retouch just there. Okay, so same again. Let me just wait for one more red candle to see if it bounces off it. Yeah, you see there? So yeah, technically there, but to say I'm not cheating, I'll enter there. We'll go for a 9 pip stop. Let's go for a 10 pip stop loss, 30 pip take profit, shall we say? Yeah, I don't think we'll get 30 pips because that's way down there. Let's just go for 1 to 2 because my entry point was a little bit late. Obviously, but it is what it is. I want to show you. So hopefully, oh, there we go there. That's annoying. We got stopped out. And then does price eventually drop? No. Okay, so we carry on again. Let's find more diversions. Okay, so I'm going to put this side by side here again. Oh, there we go there. That is a possible divergence here. Hold on here. I'm not going to count that one. Okay, so we lost that trade. Is that? Yeah, you know what? Let's count that one. Let's count that one. And we'll count that as divergence. A little bit. What I sometimes don't like, especially when trading divergence, is when price goes flat like this. But technically, you can't argue with it. It is divergence. Price is correct. Well, basically, price has gone sideways, but the MACD is creating lower highs. So not the best divergence because it's not technically creating higher highs. It's going flat. But again, we'll take the trade. It's not. I mean, we've got divergence signals, so technically, I should take the trade. I'm going to mark up the previous low, which is going to be just there. Looking at the 1 hour charts, we've definitely got a structural level there. So same again, I'm going to wait for this area to get tapped into, which it just happens. Just waiting for this area to be broken. Just there. Is that a break of it? No, it's still at this level. There we go there. So as we can see here, do we come up and retouch it? Yes, we have. Perfect. Just there. So we retouch this level here. Right, so this is definitely divergence now, break of structure, area of resistance. Let's take the trade. What I'm going to do is I'm going to go for a 10 pip stop loss, 20 pip take profit. Hopefully we win this trade this time. Okay, technically, there you go, there we win it. This trade's with the trend because same again, they're with the trend. We made a nice little 5% gain. I'm going to do 2 more trades because obviously I'm trying to do this video within 20 minutes because after 20 minutes you lot get bored. So same again, I'm going to go back to the 1 minute charts, 5 minute charts, shall I say. I'm looking for diversions again. Here we go here. We've just crossed over on the MACD. Please create diversions. No, it hasn't. Okay, so here we go here. Oh, is that divergence? No. Here you go here. Here's a nice bit of diversion. See, this is the perfect diversions. This is what I call perfect diversions. But not every signal you get is going to look perfect. Not going to look like this. But there you go there. Price is creating higher highs and the MACD is creating lower highs. We've got divergence signal again. So same again, I'm going to mark up the previous low. I'm going to wait for that change of character just there. Go to the 1 hour charts. Have we got an area of structure to justify why we've got a change of character? Yes, we have. I'm happy with that one. Doesn't need to be perfect because we're trading more diversion than actual structural levels. We just need that structure there as confirmation. It doesn't need to be perfect. Okay, so back to the 5 minute charts. I'm going to wait for this area to be tapped into. It's been tapped into there, but again, we've just bounced off it. It's not a downtrend just yet. So wait for that. Here we go here. There we go there. It'd be interesting to see if we actually come up and retouch this level. Perfect. Oh my God, this is perfect. Okay, right. So same again. We'll go for a 10 pip stop loss, 20 pip take profit. Hopefully you win the trade. Nice. Come down. Come down. Perfect. Oh my God. Perfect. Perfect setup. Right. So let's do that one more time. One more time. Okay. So same again here. Same again here. Right, same again. So I'm going to wait for diversions. Here we go. Here we might have, no, not diversions. Not diversions. Nope, nope, nope. I'm waiting for, basically what I'm waiting for is the MACD to go oversold, overbought or oversold. And then price to carry on in the direction and the MACD to do the opposite. So I can do this really quick. Okay, here we go. Here it goes. Nope, oversold. Oh, was that? No, that's not diversions. Oh, here we go here. Come on, come lower. Come, no. Oh, here we go here. Oh, no, that's not technically diversions. Maybe it is here. Nope. This is what I'm trying to say. Sometimes with diversions is that obviously diversions is following trending currency pairs. So sometimes, oh, that might be diversions. Yes, here we go here. Here we go here. Right. So same again. Not as perfect as the last setup, but you see how price is creating lower lows. Look at the MACD, it's creating higher lows. Okay, so it's diversions. We've got signals here. Great, perfect. We've actually got diversions there as well. As you can see here, this is also diversions, but I like to wait for the MACD to recross over the oversold level. So I want to see price go oversold, come up, and then go oversold again and be higher. So it's a bit complicated, but basically that's diversions. That is the kind of setup that I look for. Now, same again, I want to go to the 1 hour charts. We've got clearly an area of support. Okay, same again, doesn't need to be perfect, but there's clearly a level just there. Back to the 5 minute charts, wait for a change of character. Where is the previous high? It's just here. So we're basically just going to wait for that area to be tapped into, perhaps a retouch. So again, we now tap into this zone, but it could bounce off it and continue lower, as you can see there. Now, I would say this trade becomes invalid once it breaks the previous low. So if it breaks the previous low, it would become invalid. Okay? It hasn't here. Well, it has, no, it's still bouncing off that level. You know what? Let's just take the trade. I would kind of say this is invalid now because it's basically sat here for about an hour. It's sat here for hours. Look at the 1 hour. See how much it's sat at that level. But just because I'm mindful of the time of this video, what I'm going to do is I'm just going to mark that up there, right? And I'll show you. Oh, there you go. There we broke it. So there's no confirmation there. I'll try and find you one really quickly if I can. Really quickly. Come on. Let me try and find you one more. I'm going to put this side by side like this again. I'll try and find you it really quickly. Oh, there we go there. That was one perfect. That was one perfect just there. Just here. Perfect setup. Same again. Okay. Diversion. See how this is the perfect setup. You see how we've got diversions and then price crosses over and then back over. See that? And then we got diversion. See that there? That for me, perfect setup. Perfect setup. Okay. Again, if I go back to the 1 hour charts, there's obviously a clearly level there. Obviously, I'm just mindful of the time. So I'm going to mark up the area of structure, which is just here. That's the previous low. So wait for price to come down here. Bang. Oh, that's annoying. We didn't retouch that level. If we'd retouched that level just there, that would have been a perfect selling opportunity, but unfortunately we didn't touch it. I'm going to leave that there. There's two setups that kind of were perfect, but it didn't give us an entry point. But, you know, we made 7% for God's sake, you know, pretty much 7%. I hope you enjoyed that video. That is how you trade diversions. Like I said, you're not going to get many setups with diversions because it follows trending currency pairs and not all the time trending currency pairs trend. 90%, or I made that up, not 90%, but the majority of the time, price and currency pairs are consolidating and not trending. But when they do trend, they're the perfect opportunities to capture diversions and reversals. Hope you enjoyed that video. My name is Jamie Palmer.